Play the auction, not the emotion. Follow volume, follow truth. Smart money moves first. Trade where the banks trade. Smart money futures.
If you're wondering whether last Friday's NASDAQ sell-off came out of nowhere, well, it didn't. And if you were surprised by it, that's not a failure on your part. It just means you were probably looking at the wrong information. Because long before NQ dropped more than 2%, the market was already telling us something important. Not through the news, not through indicators, but through structure. Today, I'm going to walk you through two charts and show you the exact auction-based clues that suggested a major sell-off was becoming increasingly likely before it ever happened. This isn't hindsight. This is how institutions read markets in real time. Let me be clear up front. This is not about predicting tops, and it's not about catching the exact high. It's about recognizing when a market has shifted from a healthy trend to fragile balance and then on to a liquidation risk. If you can identify that transition, you don't need to be perfect. You just need to stop doing the wrong things. So the big clue most traders miss is the value migration. Let's start with the higher time frame volume profile. Well, price spent multiple sessions rotating sideways near the highs, right here. The pink line here is the POC, and the top red line here is the VAH, and the green is the VAL. I made the VAH red to remind me that it is an ideal shorting area, and I made the VAL green to remind me to go long or take buys there. Okay, so at first glance, this may look bullish, but in auction market theory, this is where the nuance matters. Healthy markets don't stall at the highs, like NQ did since, 12.2, so 1, 2, 3, 4, 5, 6, about a week it spent consolidating here between, let's say, 25,550 on up to 25,840. So once again, healthy markets don't stall at highs. They build acceptance. And acceptance means value migrates higher. The POC moves with the price, and new highs get used, not just touched. Right? So notice how the 25,840 got wicked up through once, twice, 3 times, 4 times before Friday. And each attempt higher stalled, and it overlapped prior value and filled to build new acceptance above the high. This is called failed value migration. And when value repeatedly fails to move higher, the market is telling you there are sellers here who are happy to do business. And that's not bullish. That's distribution. Okay, so when LVNs stop working, this is a critical institutional tell. Okay, let's talk about something subtle but extremely important. LVNs, or low volume nodes. Normally, LVNs act like rejection zones. And instead of rejecting, it accepted. Right? So let's zoom in on the 60-minute volume profile. Okay, so you can see here the lower end of value was around 25,400 over here. Okay? And also, if we zoom in here, look here. You know what? Let me just move this drawing to right here. You see this? How it kind of notches? This is a LVN, or low volume node. I'm going to put the green line right there, just so you can see how price reacted to this low volume node. So price entered the LVN at the open on Friday, and look at how NASDAQ, or the NQ, reacted to it. First, it sold off hard, just ignored it, right? But then what did price do? It wicked up and tested the LVN to see if there's any additional buyers or sellers at that price, any additional liquidity that could be harvested. So when LVN stop rejecting and start accepting, right? So this right here, this is accepting. NQ accepted the LVN from the bottom side, from underneath. So it now is turned into resistance. Sellers are comfortable transacting at higher prices, and buyers are no longer being aggressive. So this is how markets go from choppy to violent. The initiative buying was also dying. Another clue showed up on how price moved earlier in the week. Upside initiative produced long extensions, right? This is a good example. How price found 25,400 and then extended back up to the highs. So upside attempts were short, immediately faded and rotated back to balance, like right here. That's initiative exhaustion. Buyers weren't gone, but they were no longer strong enough to move price. That's how tops form, not with panic, but with effort that no longer works. VWAP lost its power. Now let's shift to speaking about VWAP. Okay, so earlier you'll notice how earlier in the week how price was using VWAP, just kind of trading in a rotational mean regression around VWAP for pretty much the whole week. And then on Thursday, it started testing the outer edges. Thursday was an amazing rotational day, right? You can tell from the D-shaped volume profile right here. So the VWAP acted as a support, trend anchor, and continuation reference. But later, notice what happened on Friday. NQ sold off hard right here in the Asian. So this right here is the Asian session. And then this is the London session. And then this is the New York session. Okay, so NQ consolidated in a tight range, then broke out to the downside. Sorry about the rooster. Broke out to the downside, then came back and tried to test VWAP, but failed miserably. Price crossed it repeatedly with no follow-through. This is a huge deal when VWAP stops behaving like a trend reference and becomes a mean reversion magnet. Or in this case, we couldn't even get back to VWAP. Here, let me switch to like a 15-minute so it's a little more clear. This is a TPO chart, and you can see how, and TPO stands for time priced opportunity. So you can see where NQ spent most of the time. Okay, And we've got the VAH and VAL, and then the POC. So the purple line is the POC. And you can see how it pretty much matches what the volume profile was saying. How it's consolidating in a range, and then it sold off hard. So the points of control began clustering and flattening. So you can see how the points of control didn't really migrate very far over the course of several days. This is generally a pretty good indication that the underlying security, in this case NQ, is getting ready to make a big move. Anytime you see consolidation like this, it's oftentimes smart money slowly accumulating a long or a short position under the surface. So, once again, this tells us that large players are transacting heavily, but not pushing price higher or lower. In this case, they weren't really pushing it higher. Even though we're at the top end, we were getting close to an all-time high. NQ was not able to push any higher. So think of it like pressure building in a pipe. When compression resolves, it doesn't drift, it breaks. And that direction matters. With upside acceptance failing, the path of least resistance was down. And why was this drop so fast? Here's why the sell-off felt kind of sudden. Once price broke below the composite balance area, which, here, let's zoom back out. Let's say that composite POC range was from 25,560 up to 25,720. Okay? And look right here, what happened. I'll draw a horizontal line so you can see it a little more clearly. This is purely the POC, right? This is not a support and resistance level. So you can see how NQ, right here, tried forming a bottom, rotated back up to VWAP, and then sold off hard. And it was in this sell-off right here that gives the indication that fair value was rotating lower and that this might be the start of a big move down. So the downside structure was thin. The prior LVNs had been defended, right? So up here, you'll see these are the LVNs. So we have a pretty substantial volume shelf right here. And this area. And up here. So here's a low volume node, and then up here there's another low volume node. And they were defended aggressively by institutional money or smart money. Okay? So markets fall fast, not because of fear, but because there's nothing to stop them. This is called an air pocket. So here's the lesson I want you to remember. When value stops migrating higher, as you can clearly see from this 60-minute chart, and LVNs stop rejecting, or are rejecting and stop accepting above and rejecting it and moving lower, the next move will not be slow. It's going to be a fast move, in this case to the downside. You don't need to predict crashes. You just need to recognize when a market becomes fragile. This is how professionals survive big moves, sometimes by trading them, and sometimes simply by staying out of the way. And if you found this helpful, make sure you hit like and subscribe, and let me know in the comments if you want a weekly auction-based risk checklist to spot these conditions in advance. And I plan on doing at least one video per week moving forward. And because I live in the South Pacific on an island, I'm going to do an analysis early in the morning so you can see primarily NQ and ES futures and what my analysis is leading into the RTH session, the New York Open, Cash Open, whatever you want to call it. Okay, great. Well, I will see you in the next one.